Ladies and gentlemen of the crypto space, we're live on a Monday, December 4th at 11:34 a.m. Reversal, panic. Emotions, all these things are a pain in the neck. Everything reduces to very fundamental things. I'm a reductionist at my core, and basically you have path and destination. Those are two ways to inspect markets. Path is change over time, weekly, what's going on in the monthly. Destination is a different type of consideration, and there's different ways of engaging with both of those characteristics of markets, and there's countless other considerations. I guess the point of today's stream is there's a whole lot of volatility going on, and there's two things that are ever present in these markets with the way conditions have been. This is the biggest bubble ever made. Things are at crazy valuations. Equities are crazy, stupid. I can't find an appropriate word for they're gross. This is just the highest top of amount than anyone's ever seen relative to debt to GDP. It's just debt to earnings. It's everything looks like it's going to absolutely implode. Okay. And then on the other hand, people talk about, all right, they inflate everything, the debasement, and everything just goes up, and up. So the reality is, it's both. Everyone's talking about both because it is both. And that presents the truth. The truth is, that makes it irrelevant. It means an alternative narrative or an alternative methodology is needed for inspecting and engaging with markets. You can't subscribe to either one. Oh, I believe it's going to go up, and up because the Fed will cut rates, the Fed will purchase excess liquidity in the Treasury market, and they'll stabilize collateral prices, and everything goes up. And on the other hand, this doesn't make sense. It's a catastrophe in the making. Everything's going to go down. The only rational way to engage with both of those is to realize both of them are a ridiculous way of looking at markets. Let's pop it over to the main screen. So this isn't necessarily consistent with the point I'm trying to make with that brief introduction, but this is the volatility that sparked everyone's interest. Bitcoin pushing through 40, and gold ripping past all-time highs, and a massive wick back. If you look on the daily, it looks like a very large candle. And then I'm sure you see on social media how folks throw up the candle, and it's like, whoa. Meanwhile, it's a mean regression to the daily 10 SMA. So you got to pull out, you got to zoom out, and realize that it's all noise. Everything is noise. And probably back to the point I was trying to make, whether it goes up or down is not the way to engage with markets. To engage with markets, we want to attach to, as Bitcoiners would say, to the fastest horse. But then as a contrarian, I would say I don't want to necessarily own the fastest horse because it's not necessarily an expression of something that I want to, or something that I define and want to own because I see a value other than a monetary value. I see the value in enterprise. I see the value in companies. I see the need for credit in an economy. An economy doesn't work with just money. Economies require credit. That's how businesses are born. That's how ideas come to life. That's how innovation actually occurs. You need capital, and it's not just existing capital. You need to borrow capital as part of a healthy economy. So that's something that is very much glanced over by the Bitcoin community. It's not just money. Money doesn't fix, frankly, without credit, money doesn't fix anything. It doesn't fix an economy at all, and none of this fixes disparity and the concentration of wealth. The vast majority of wealth is just always concentrated, especially in the Bitcoin community. The few own the vast majority of Bitcoin. So these things that we engage with don't fix the things that everyone talks about them fixing. What's the point in that statement? The point is the reason we're interested in these assets isn't for social media's top posts and top reasons that we should have interest in them. We have interest in them because they are new and different, and they are an iteration, an improvement on traditional enterprise, at least financial enterprise for that matter. And plenty there's plenty of noise that's going to drive you to think, oh, it's going to go up forever, it's going to go down forever, and that's irrelevant. So when I see this kind of volatility in gold, and I see these price targets on Bitcoin and all this insanity, and I see it. I see in the data everything looks positioned to completely collapse, like the entire financial system. And the only narrative for up is debasement, and they obviously need to debase because otherwise everything collapses. I'm not attached to path at all, down or up. And I have, over the years, gotten much better training myself to be emotionally uninvested, merely financially invested, to destination, not the path. And I'm indifferent. Whether all of this collapses, I made the right choices. I own the right things. I like to think of 2017. I owned a lithium refining operation in Canada called Nemaska Lithium. I put in $250,000. It was a hostile takeover, and they drove up employment rates in the region and basically forced them into bankruptcy. It was complete, hostile corporate activity. Obviously, none of this ends in court, and retail shareholders got completely screwed over, and that was the largest capital loss I ever had in equities. To this day, 6 years later, with such a large capital loss, that refining operation is one of the most important operations in the Western Hemisphere. It just is. It was the right investment. And that led me to realize a lot of things. The right investment, the best investment, something that appears attractive and a no-brainer, isn't necessarily a good investment. And that's something I say nowadays, the best technology is not necessarily the best investment, because you have to understand vested interest. You have to understand the powers that be, and capital is power. And look what the capital did to that operation at that time. Manipulated and drove out retail and caused a collapse of the retail shareholder price point. So it was all that capital loss because I didn't understand the nature of investing as well as I do today. So the point is, today, even right now, that's the most important lithium refining operation in the Western Hemisphere. Nothing changed. I was right. And I think it's owned at this point in good part by Livent, but Livent is massive. And I'm just digressing on the lithium opportunities at this point. But what that means is it's uninvestable, at least the way I want to have exposure to it. So it's completely invalidated from anything I would look to for an investment opportunity. But it's still a great tech. It's still a great operation. And that's the way I look at these crypto assets. It's not about the path. It's about these are the right investments. These are the best way for me to express myself and my capacity to see a good investment. And just fortunately, I've become more risk adverse over the years. And I've made investments not just in consideration of the enterprise or the technology, but in consideration of vested interest, position size, portfolio composition. I've taken appropriate position sizes, 1% bets, 1% turns to 10%, it changes everything. 1% to 5x the portfolio really changes everything, and that's something that really is only achieved with microcaps in crypto markets, Where else are you going to get something that goes from a million market cap to a half a billion market cap and 500x on the money? You're not getting this kind of shit in equities markets unless you're talking about ridiculous time horizons. But then you got all the vested interest, the board and the mega wealthy shareholders that carry influence. And I'm not here for that shit. I don't have time for that shit. I'm here for actual opportunity that doesn't exist in equities markets. These markets have that kind of opportunity. So whether it goes down or up, these observations and the methodology that I use to engage with these opportunities are correct. And that's what I hang my hat on. And that's what brings me the comfort that I have when I present to you on stream and when I sit back and introspect on the decisions and choices I make. I'm right. I'm reasonable. I'm prudent. Restrained. I deploy capital efficiently. I don't waste capital. Sure as hell. All right. 2020, 2021, yeah, there was a little bit of malinvestment. Could have done better, but that's the whole point. We're here in 2023, basically 2024. Looking back at 2020, 21, and I don't even want to dare go back to like 16, 17. And we look back and we see what we could have done better. How we could have behaved differently, how we could have invested more rationally, how can we cure the malinvestment of times past. And that sure as hell is what I'm doing at this point. I've taken 2 positions in 2023. It was 1 position in 22. Wasn't it just the aura position in 22? It was the convex, and it was the CTR recently in 23, and it was the NOLA I've talked about. It was a micro position. So it's like 4 types of positions in 2 years, because there's nothing that screams opportunity. Nothing. Until there is. And when there is, and it's obvious, that's when you could deploy a little bit of size. But that size is relative to your free cash, so you still have to remain rational. Hope that helps. That's somewhat of an intro of what's on my mind this morning with the kind of volatility we're looking at. Let's put it on log. It's not on log. So I want to explain another topic briefly, and I'll hit the comments. I always get to all your comments. Bitcoin's at a nice premium. Plenty of reason for a pullback. And these pullbacks could last a quarter. This is a quarterly chart. So we could literally see Bitcoin rip to 45, 6, 7 to the end of the year and not hit a new fresh high, which would make sense. I don't think we're going to get fresh highs in 23. And then literally you could wait for a pullback. I mean, look at the chart. On average, you don't have 2 green candles in a row. Green, red. All right, fine. There's a bunch of, when you're in a full-fledged bull market, that's probably like Q2, 3, 4 of 24. I don't see it as Q4, 23, Q1, 24. But you never know, which is why you stay in the market. You have exposure. If it goes down, okay, it goes down. What are you going to do? Did you size your position correctly? When you size correctly, depreciation is only a path to your destination. Ethereum looks a little bit more favorable as compared to Bitcoin. It's still at a premium on a 3-month time weighted average price, but look at the 10 SMA. So Bitcoin is well above the 10 on the 3-month. Ethereum, it has just in literally the last week. Was it last night? I think it was last night actually. Ripped above the 10 SMA in the 3-month. So it's kind of just breaking out. I value the time weighted average price more than the 10 SMA on this chart. And on this chart, like 200s are irrelevant. Time weighted average price is much more meaningful. So we are at premiums, ladies and gentlemen, or finally getting above $1. That's pretty nice. Such a new asset. We need to zoom in. Above the 50, not the 100, but the 50 looks like it's more interesting, at least on the daily time frame. The weekly 10, weekly TWAP, favorable conditions it looks like. Stargate can't get above 60. Jesus. It's being held down by this 50 on the weekly. That looks really good. Go figure. On the monthly, look at that twap. I mean, come on. Come on. I'm not adding at all to this. This is a legacy position. Adam got stopped out below the 10 buck region. And that's pretty much the time weighted average price, give or take. Yep. Pushed a little bit above last month. And we're only 4 days into this month, but expression of support on the 10 SMA and the monthly. That's a nice thing to see. And this is consistent with like total 3, where, not Bitcoin, not Ethereum is still not breaking out. And that makes sense. The whole macro cap versus micro cap argument. Bitcoin, Ethereum start to run, and it's not even Bitcoin, Ethereum. It's really Bitcoin, and then Bitcoin profits are taken over to Ethereum. Ethereum outperforms, and then Ethereum starts to depreciate as it is used to finance altcoin activities. I'm not too fond of the altcoin expression. The Ethereum enterprise activities may be more applicable. That was a hell of a candle on gold, but it matches basically May, matches basically March, and you could bring up all sorts of conspiratorial arguments like it's being suppressed. Oh, fine, great. Much bigger candle back in 2011, and then an even bigger candle back in 1980. Different world in these time frames, but still relevant from a volatility perspective. Means this volatility is not that volatile. And I guess probably the easiest thing to be said is I don't expect significant upside volatility. I expect continued muting of volatility to the upside as geopolitical collusions suppress price, suppress volatility. I mean, that is literally the business of central banks. And we see that when you're looking at the VIX at 13, considering everything that's going on, volatility suppression. Now, they haven't gotten control over the move yet. Treasury market volatility, if I could find the ticker, still at 111. I think when this rolls over, you're going to see some wild things start to happen. Probably in the appreciative direction, which is a direction we all would like to see, which is why we should have eyes on the move. Because when this rolls over through a 10 SMA, back in 2009, that's when everything started to make its bottom. They finally got control over Treasury market volatility, which is something that Yellen talks about all the time from a Treasury perspective. And the Fed was forced to take interventionary actions, post 2008 crisis with their QE programs to suppress volatility. It's all about suppression of volatility. So eyes on for suppression of volatility. As the volatility is suppressed, you'll see liquidity conditions continue to improve into 2024. It's going to be a wild year. It's going to be a historic year from a collateral perspective. Entering 2024 from such a high Treasury market volatility perspective. Entering 2024 with currency markets doing what they did, Japan doing what it did. I mean, this is an absolutely wild chart. How it appears to possibly, hopefully, be rejected by the 3-month 200 moving average. This continues up. You're talking about systemic issues with global currency. And if there's issue with Japan, they have a capacity to introduce significant volatility into the U.S. Treasury market. That's the connection. You have to see the connection between stuff to see how it affects the part of the market that you're interested in. We're interested in the crypto market. And all this shit that we look at with macro, DXY, USD, GPY, our bonds, our treasuries, gas prices, all of this affects the crypto market. Leading indicators to tell us pretty much what the hell is going on. I like seeing Ethereum above 2,200. That's quite comforting. Let's hit some comments. Kaysen's in the house. Good morning. Just another Monday. It's just another Monday. It is. Some nice volatility, some nice appreciation. I have nothing to complain about and what I'm looking at in the charts, nothing has changed. Nothing at all. Uh, Ready for Captain Rational to put everything into perspective. Hope it helps. Hope it helps. Asmith, good morning. DeFi Dope, my first live stream after 18 months. 18 months! Welcome. Enjoy. Enjoy. I'll answer any questions anyone writes. I always do. Mark, first one I'm actually catching live. I usually watch the recordings. Well, we'll keep doing this stuff for a long time coming. DeFi Futurist in the house. Hi, Cap. Love the cute baby picture. Yeah, AI is wild nowadays. Dan, pleasure. Good morning. Does it still feel like 2019 to you? We'll eventually get a nuke before the real bull kicks off. Now, bear in mind, in March of 2020 isn't really what people think it was. That's aside from conspiratorial COVID narratives. The U.S. banking system failed in September of 2019. And it's in the charts. I'm not going to pull up various charts, but you can see it nicely in Move. You can see it nicely in the 10-year. And they papered over it with the standing repo facility. So there was going to be some serious shit go down in 2020, whether they shut down the global economy or not. Weird to try and peer through, what happened with COVID to see what the economy was doing. But there was some serious stuff going on with the economy. What do we know compared to 2019? We know we have a standing repo facility. We know we have a standing reverse repo facility. We know that we have the BTFP from a regional banking perspective. And all of these things are designed to suppress volatility. All of it, literally. You don't want a bank to collapse? Okay. BTFP. That's how you prevent that kind of volatility. That's exactly what these programs do. The volatility with regard to Fed financing of RRP, they just have negative entries on their balance sheet, credits that they owe to the Treasury. So that's not really a source of volatility. So where's the volatility come from? If they have all this capacity to paper over the volatility, China. Today is whether Evergrande gets chopped up piecemeal. I shared in Discord a nice, the keynote speech from Peter Zeihan. China is so inflated, it's beyond belief. That chart that he presented of China was gawking. I was gawking at it. I was like, wow. So China could be a massive source of volatility. Japan as well, if something happens there. If U.S. rates don't come down, my sentiment probably is that does Japan get to, end of Q1 2024, Q2 2024, where the market has already priced in some rate cuts, and that will reverse the flow back into the yen. But this is going to be an interesting conversation when markets top, when we reach the top of the next liquidity cycle. I don't see how they're going to get the cycle. There's going to be some crazy stuff in the next 3 years. It's going to be crazy. And this has got to be like the last liquidity run before structurally they're going to have to try to change something. It's just the fact that they've even been able to potentially stabilize yen flows is quite extraordinary. This is like endgame scenario with what's going on in China and real estate. Peter Zeihan was talking about how certain countries haven't had their subprime moment yet. And that's volatility. That's debt default, which is currency destruction, which means liquidity destruction. And it's like, not time bombs, but booby traps laced throughout the global economy from a liquidity conditions perspective. And that means everything that we understand about liquidity. If you're lacking liquidity, you sell anything you could find to get the liquidity you need to stop yourself from exploding your balance sheet. And I say that from both a corporate perspective as well as an individual's balance sheet perspective. We have a balance sheet. It's the same thing. So the fact, if they could get this thing to top, that's extraordinary. I don't see how they get the yen to stop depreciating without U.S. rates coming down. They have to stop the carry trade. And they got to be very cautious with that because otherwise U.S. rates go up. And I don't see how the hell U.S. rates come down with the amount of on-the-run treasuries they got to issue next year unless the Fed buys it. This is just a wild series of interconnected pressures that are going on right now and are going to get really weird next year. Anyway, so I guess the point is I like the assets I own. I think they're the right assets. Hope that helps. Nuke. So I want to reemphasize that word you mentioned. What does that mean? You buy more? I mean, who was buying at the bottom in 2022? I mean, you literally had the ECB come out and say it's over, and that was like at 16. Like this is all going to fall apart. Let's turn off log. Let's reset the scale. I mean, this was a massive, massive bubble and a massive capitulation. I don't care what anyone says. This is a bubble in Bitcoin. Anything that deviates from the average price is a bubble. But when you go out to a long enough time frame, the average price can go up significantly, and that's pretty much what Bitcoin's doing. Buy at a discount, sell at a premium, and this was a hell of a retrace, and it was a hell of a deviation to the downside. Note that at least the deviation to the upside was significantly higher than the deviation to the downside, and this deviation was significantly more exacerbated as compared to 16, 17, top in 17. The bounce in 19, the interruption in, I mean, it was really the interruption in Q4 2019. In June, July, August of 2019, Bitcoin was up at 13,000. That was a hell of a bounce because it was up at 13,000 in Q2 2019, which is a retrace all the way back up. It reminds us of exactly where we are. So right now, this is the bounce, just like we had in 2019, if you guys see that. So I guess that's a good observation or a good thought experiment, Dan. If we didn't have the repo crisis in the United States, and then whatever the hell happened in 2020, this was the bounce in 2019, not 2020 after whatever the hell they did. It's 2019. So that's where we are now. So we either see some sort of systemic crisis, in which case I don't think we dip below, we certainly don't dip below time-weighted average price on the 6-month chart. We're not getting below 19. Bitcoin has never been below the time-weighted average price, even during the last years, even in COVID crisis. It literally, you see this? In 2019, all that insanity of price action, and it was literally just a retest to the 6-month time-weighted average price. So I don't see that being such an extreme downside target. But I certainly see like a 3-month time-weighted average price. So if we see systemic crisis, 31 is quite reasonable, and then you overshoot to the downside, maybe get a 28. You print the higher low. The odds of us printing a higher low as compared to Q4 2022, 16, so 20. I wouldn't place bets on that path. That's what people talk about when they say they're downside price targets. They put in a levered short position, or they put in spot bids at that price, which ties up free liquidity. I don't like engaging with markets like that, speculating with people's money and people's lives. I'd rather own these types of assets because that brings me great, it makes me proud that I'm able to peer through the bullshit and not be swayed by the capital gains potential of taking bets on path. Much more comfortable appreciating and being excited for the destination. Hope that helps. What's the significance of gold hitting all-time highs for crypto? Well, gold is kind of like fiat at this point with the amount of paper derivatives out there. Um, Gold is sovereign money. It's the money countries, nation states use. That's the money they use as money. It's money. And they have a capacity to reprice gold significantly higher. So I'm not interested in it owning it. You can own a little bit of it, which is useful as money in case there's currency crisis. Because why? Because most people are receptive to the presence of it. If you see a gold coin, people in the world are likely to exchange something for it because they have a perception that other people will see the same thing and be like, oh, there's value here. So it has perceived value, which is meaningful. So that's not something to be dismissed. But that doesn't mean it's the fastest horse at all, and that's really not really the narrative that I subscribe to, as I've been saying. Um, but it is quite meaningful because when it breaks to a new higher high, one part of me says they're losing a capacity to suppress the price because you could infinitely short it with sovereign capital, sovereign credit units, sovereign currency units, sovereign liabilities. So that means they're losing control, and it's going to break out at some point because of how perverted the system has become, and that means something. It's an expression of a story, and that's meaningful. But it's also meaningful because it is gold, and that's what the sovereigns use as money. They're giant vaults, mega vaults of gold. So it's representative of where we are in the cycle. It's representative of the state of global monies. So that's interesting. And clearly we see that expression in Bitcoin as well. You realize Bitcoin was trading less than 40,000 last night. It was 39.5. That's 41.6. So people are using these assets, be it gold or crypto, to say something. Or rather, their purchases of them collectively tell us something about the state of the system. And that's the takeaway. Have you considered selling your ETH into other assets that you either already own or want to own or just sitting tight? So I have cash. I have my Ethereum cash. I don't need it currently for real world expenses. I am very employed. So that cash is a nice denomination. You know, you could trade it on FX markets, foreign exchange markets, like CowSwap or Curve Finance if need be, into other denominations. As I've talked about, it's a cash, just a different denomination. So would I use that cash to buy something? The only thing I've bought was the CTR, and it wasn't bottom. I bought it about 100% off bottom. So could you imagine? It takes a lot for me to take a position, especially at 100% off bottom. But it's such a mispriced asset still at this point. I mean, there's literally no debasement of it. It's just it's fully diluted. It's got to be the best looking asset with regard to deposits versus CRV ownership vis-a-vis SDCRV versus market cap versus fully diluted value versus looking at vested interest, the top holders list, of which I am now one of the top holders of CTR. It just screamed on all fronts. It looks good from a technical perspective as well. Now I've been contemplating to buy more, and then when. The problem is there's only a couple of holders that have more than I do. It's, it's less than fingers and toes. It's about, it's around 10, give or take. And I don't think they're letting go. I mean, this would have to come down significantly for me to consider adding. This would have to overshoot the golden fib, 618, and hit the 5. I don't know if we're in bearish market conditions enough to warrant significant restructuring of the top holders list. I'm not going to buy at a premium. Not going to buy at a premium. It's not happening. So is it the position size I want? I'd want to be higher on the holders list. I could afford it, but I'm not paying these prices. I would need persons that have adequate supply to significantly exit their position. This thing would need to come down 50%. I'd want to see 0.382. That'd be a crazy overshoot to the downside. Cut it in half. I mean, that's why. I mean, the position I grabbed was 70 something cents, 72, 78 cents. It's right here, this little leg right over here. And then folks kind of saw what I saw, and that's cool. But I would need significant depreciation. I've been looking at a couple of things. FXN, 618, golden fib, 618. Slow moving asset, not a lot of volume. 4.32 mil on a 457,000 volume on 4.32 mil. All right, it's not that bad. It's about 10%, but it's not a lot of, when assets are hot, they're churning market cap on a daily. I have to talk to him later. I'll be there soon. So I was tempted here for a second. So with the fully diluted value, you have to multiply by the percent lock, or subtract the percent lock from it. So this has quite a nice setup, but it's still at quite a premium. Like if you're buying at 90, shit, you're buying someone's 7x. I'm not buying someone's 7x. I'm not. I'll buy a 1x or a 2x. So that's why like $1.25, maybe $1.50 at 0.5. I could see myself adding there, but not at 2 and change, and certainly not higher. And if it goes higher, it is what it is. So sometimes you have to be comfortable with what you were able to acquire. And there's no way I would acquire at these prices. And that's not because these prices are necessarily bad in some way. It's just that it's a premium rather than a discount. I was looking at some other stuff. I was looking at Grail. This thing looks to hit the 618 as well. But look at this damn market cap. Fully diluted. We're not in a time where 20 mil turns into 200 mil turns. This isn't a $2 billion asset anytime soon, and I can't see it as a $2 billion asset. What? It hits 5x. I'm sticking with, if this is going to be a 5x or 10x, I'm just going to hold Ethereum. So therefore, from a Dan perspective, it's better just to hold the cash. I hope that makes sense. So I'm not swapping over to something that has increasing volatility as compared to pure cash that's going to rip a multiple like that, more likely than less. So I was looking at this. If you could get the discount. So if you bought it down to 8, so what does that mean? If you get the discount and if you're able to get it at the 843, and that would be half, it'd be a 10 mil market cap. Okay, that's an interesting condition. So the opportunity's passed. From my perspective, how I evaluate the asset. 10 mil market cap, 50 mil fully diluted, 826 rips to 1300, then you're fine. You got plenty of breathing room and you're in profit. Now, another thing to consider, 10 mil, is do you have enough capital to buy a position? It's much easier to acquire an adequate position size with a 1 mil market cap asset as compared to a 10 mil market cap asset. I would need to have, if I was buying this at 10 mil market cap compared to CTR at 1 mil, I would have needed to deploy 10 times the amount of capital to have the same percentage of circulating supply ownership. And that's a great way to invalidate investment considerations. You only need one or two crazy investment opportunities to make big things happen. So I don't want to own, why would I want to own 0.1% of supply if I could own 1% or 2% of circulating supply? That's an order of magnitude difference in leverage and power and control. And that's meaningful. So this didn't offer enough considering its current price point. Now, if I looked earlier, but that's okay. If the opportunity isn't here, you missed it. It may never come again. And that's a great conversation to have about Bitcoin because it's clearly at a premium. And I recall buying it at 280. And it ran to 5 something, and I bought a bunch of sheets from overstock.com. $280 a Bitcoin. Those are the days. So it's clearly at a premium now. So that means it required a redefinition, a different narrative, a different conversation to be had about how to treat it as part of a portfolio. It's still very meaningful. You're not going to get the multiples. You're not going to get the 100x. It may be over a time horizon, but that time horizon doesn't suit the cash position. It just doesn't. I think there's better destinations for capital, and that's why we have the Bitcoin, the Ethereum, and the stablecoins as the cash position. This narrative will change over time, but that's basically the way I break down the portfolio: the cash position and the investments. And the investments, I want to be productive. And fortunately, I'm looking forward to what Aladdin and team come up with their tokenomics of FXN, tokenomics of ALD. I think they'll see also the shortcomings of Cleve. Without the recycler, I see it's just not going to appreciate significantly. Even with the recycler, anything that has expected dilution is not going to appreciate significantly. And that's the expectation with anything that has emissions: Prisma, Curve, Aura, Bow. So I think there's some interesting things that could happen with CTR, particularly if you're able to leverage it to borrow on FXN. So that could be very interesting. And bottom line is this 60 plus mil in deposits. That's crazy. That's crazy. 60 mil in deposits. They control 12 million SD curve. So Cleve is the top 4 controller of convex, which is very interesting. Twice as much as Tetranode. And this is 12 mil of SD curve. So that's meaningful. That's power. So this is like curves at what, 60 cents? So that's 6 plus mil worth of curve control, and it's sitting at 246 mil market cap. All right, so cool. We'll see you at $6 concentrated just based on curve control ownership, and that's not considering the rest of the deposits. That's not considering being part of the ecosystem and the potential for this particular token amongst the rest of the Aladdin ecosystem. And that's not considering the price appreciation of Curve over time. So all of that just provides further confluence that this was an appropriate deployment of capital, which has become extremely rare for me. Hope that helps. Let's keep it going. Have you considered? Nope, I hit that. I'm sitting tight at farming. My ETH credit position serves as a foundation and just accumulating cash flow assets like Convex, and I'm liking Prisma at the moment. You know, a lot of hindsight. I have a Prisma LP as well. That you know, it's accumulating. I don't know what I don't know what it'll offer from a hidden hand perspective, but there's a fair amount of financing going on. Let's refresh. This is Prisma vote rentals. Votes 118 mil. Okay, $1 per 10,000, which is pretty boring. So if I have 678,000, it's literally $67. Okay, so $75. So it's okay. Refresh $3. That's interesting. That's 150 bucks. Huh. 180 bucks. Coinbase with 9 mil votes. I mean, that's going to get diluted to high heavens compared to the rest. So this is just the beginning. They just launched this, so um, I prefer not to have optimism. I prefer to be realistic, and I'm inspecting. Therefore, I will continue to do what I'm doing with Prisma, which is just the LP position, which is liquid, and it's F denominated. Therefore, if it underperforms the exuberance in the Prisma price, fine, whoopee-do. But the destination for the LP position is liquidation into a cash position, either Ethereum or stablecoins, depending on market conditions. So there's no reason just to not get the free Prisma in that regard. Whether that Prisma is productive or not is another story. But all things considered, I'm not interested in a capital gains opportunity. It could have a fair amount of exuberance, but all things considered with emissions, market cap, fully diluted market cap, I'm not buying anymore. I bought a little bit. I think I doubled the airdrop position, but that was it. I'm not gonna chase the dragon. Rat race, as Tetranode has called CRV compared to Convex. Uh, where are we? Oh, I'm trying to catch up. And one play five. Good morning, sir. Well, yes, what happened yesterday? Gold, the Bitcoin went up at the same time. Yeah, that was a nice pop. Fascinating last night. You need to write books. That's such a great way to put it. Time is the real adversary. It's all about time. And too much time, and you're taking excess risk. Time is a complicated consideration with regard to capital management, but it's everything. And that's why I talk about cash flows. Because you could literally chart. I mean, everyone in Discord and myself included, we could chart our cash flows through 21, 22, and 23. And FXS breaking out. And it's a chart, just like any stock chart. And that's interesting. And I look forward to having that chart between 2021 and 2030. We'll have 9 years of chart data. And my expectation is that chart trends upwards. And now I've converted portfolio management, total, all-time high and total value of the portfolio as something that's marginal. It's not as important as the chart of revenues. That's the more important chart because that's the chart you'll actually use. Hope that helps. Raul, hello. And 1.5 is a little bit of shitcoin church today. I don't like that terminology, but we looked at a couple of things. It looks like it's going to roll through some SMAs, but then again, FXN did as well. It rolled through the SMA, but it's in the fib. Looks interesting. Joe broke out as well. I was looking at Joe. That's a nice break to the upside. Look at the similarity between Joe and FXN. Irrational exuberance, break down, horizontal, break up. Irrational exuberance, break down, horizontal, break up, and then the pop. Pop, 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 pop. Pop, 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 pop. It's literally the same exact chart, which is exactly what we talk about with regard to liquidity. I mean, just everything pops when there's liquidity. And then that's why the only way to differentiate between assets is narrative and what you subscribe to and what you think makes the most sense. Joe's not very productive at all. It doesn't make a lot of revenue. Frax can make a shit ton of revenue and produce cash flow, so you literally potentially never have to sell the position. And I couldn't if I wanted to because it's a VEFXS position. Love those damn locks. Killis, good morning. H wants a curve chart. Ooh, 15.89. Reset. Boom, boom. I mean, clearly we're at bottom. I don't see us revisiting the lows. We don't even talk about revisiting the lows from a Bitcoin perspective, and I don't see it from a curve perspective. Still haven't broken the 200 SMA on the daily. That has been resistance forever. So that's the expectation. If this thing goes to $1, $1.50 at the top of the top of the next bull market, does it matter? But that's the whole point. That's the whole conversation we had about an asset like this. It's not an asset that's to appreciate. Is it going to? Is there going to be irrational exuberance? Sure. Can it experience extreme irrational exuberance like it did back in 21? Sure. Is it going to deviate to the mean? Absolutely. Is it going to print a lower low compared to 22 lows? Likely not. Have we broken out? No. Certainly not broken out. This is a massive resistance of the 200 SMA. All of that activity between January of 2023 and May of 2023 above the 200 was broken on the daily. All of that bullish activity was completely validated. That's that. This is completely off my radar for taking any more position. It's overwhelmingly productive and adequate for all future considerations in my mind. Killis, Dan, can you please look at the RLB chart? RLB. What is an RLB? No, it's not going to be there. Roll bit. All right. 11 million liquidity. Decent chart. At least some liquidity to look at. Oh, 2 cents at 16 cents. Someone's sitting on an 800% appreciation. Not buying someone's 8x. Bit of a rising channel. Ascending channel, if you will. It's a nice wick that someone bought. I need to see market cap. Oh, goodness gracious. A $500 million. Okay, fully diluted at least. Dude, this is a $500 million market cap. Where's it going? Where's it going to go? 10 bill market cap, and you're changing the entire composition of the crypto space. I mean, 10 bill market cap, and you're literally top 11. You're almost top 10, just below Doge. Ah. No, no. I wouldn't touch it with a 10-foot pole. Because that's where it's going. Can they do a 10x? Sure. That'd be crazy. Have we seen crazy? Sure. So that's certainly not something you would need it's for a 10x. Might as well hold Ethereum. I would have zero interest in something like this. Hope that helps. Invalidated. Critical mass. Why is CTR on no one's radar? That's why I'm looking at it. Because it's irrelevant what anyone's radar is. It's on my radar. for everything I've talked about. Um, I can't justify taking a position at this point, and I would have trouble speaking to assist other persons in making such choices. Here's the top holders. Number 5 has 93,000 above her contracts. I don't know which contracts, but here's individual wallets, 93,000. I mean, 70 something percent is locked. It's just it's off base. Out for lunch, 73.18. It's so illiquid. There's a mill of it, 695,000, but there's like a mill and change liquid, like 1.17 million tokens liquid. I don't know. I don't really care. What I care was that was completely mispriced. Like the gross, to such a degree, that was the grossest mispricing that I saw in the entire crypto space. I'm still looking. I'm always looking for investments, and I'm just so damn picky nowadays. I mean, even this at 10, 20 mil, it's too much. I just don't. It's not. The opportunity isn't screaming, but the opportunity was screaming there for me. 12 mil SD curve. So, FXN is a screaming investment as well at $10, at $13, all the way at the bottom here. And that's literally where this was. This was 70 something cents, and it was about 100% off its bottom. And the equation was, did I have enough capital to take a position size I wanted? And I did. And it was literally a million market cap. So that's why I could take the position size I could. So the reality is, that's how you invalidate allocating capital. Can you have the position size? Can you have token ownership? What are the other confluence factors that say, oh, it's a great idea? 12 mil SD curve. That's power. That's a capacity to significantly change flows and yield and incentives. It's a lot. I mean, Cleaver has more power. The problem is, that's the problem. It's the emissions. And we've talked about emissions for years. If you have emissions and you're diluting, you're not going to appreciate significantly unless you have what FXN went for, which is direct integration with convex. That's just it. That's the bottom line. Hope that helps. Hey, Cap, what do you think of Cardano's narrative of preferring solid tech over time to market? Yeah, Cardano is serious. I like the tech a lot. I like Charles a lot. I wouldn't invest at all in Cardano or any asset on Cardano at this time. Certainly no interest in Cardano tokens. And depending on liquidity conditions in the market, but what kind of capacity is there to transfer capital from one network to another? I'm not going through a centralized exchange. So as of right now, I have zero opportunities I've identified with regard to Cardano or assets on the network. Period. I see more favorable opportunity conditions in Cosmos hubs and probably even Polkadot parachains. I think it's just what it is. Hope that helps. But I love the tech. I love the tech. I very much enjoy when he speaks. But that means nothing with regard to an investment. Cap, do you think this is a short squeeze or real bull taking off? Well, that's bull market, short squeeze. You'll drive yourself nuts with these kinds of inspections. What matters is discount and premium. Did you get it? Could you buy assets at a discount? And that's like the low is something going to potentially do a lower low? I don't think we're revisiting lower lows on Bitcoin lower than 16 and change. That's crazy. I've already looked at the Bitcoin chart. We could roll back and you guys could roll back and look at when I was talking about it. So that's why it's irrelevant. What's pertinent is, can you acquire something at a discount or are you paying a premium? And that's what's meaningful. Um, so don't drive yourself nuts on that stuff. Is it a bull market? It'll drive you nuts. Because if it's a bull market, what you're doing is forward looking. Oh, it's going to go higher. What's going to go higher? What multiple? What multiple are you looking for? Can you get appropriate position size on an asset? We were just looking at an asset, a roll bid, and a 10x would be crazy. It would recompose the top 10. Do you think Ethereum's going to hit a 10x? Probably. If Bitcoin rips a 10x, Ethereum's going to hit a 20x, and then you don't need any of the exposure of vested interest to the same degree. Different type of vested interest exposure in Ethereum versus an enterprise, and you don't need it. You can take less risk. Food for thought. Hope that helps. On Grand Theft Auto 6, can I do TA on GTA 6? My man. You can do TA on anything. Dan, 2 mil market cap for CTRs at a premium. Okay, perspective. It's a premium relative to where it was. And that's meaningful. And that's why people look at the fib. It's overextended relative to its recent history. And you got to remember, this is sentiment here when you're looking at technical analysis. You're looking at individual human beings that collectively produce a price. So relatively, it is a premium. It's still at a significant discount as compared to all the other factors I've discussed, total deposits, as well as total SDCRV control. Significant discount. But I would have to spend X amount of dollars, dollar-denominated cash, to acquire X amount of token units. And I'm not willing to pay this price unless other vested interest fuck it up for themselves. They fuck it up for themselves, $1.20, 0.5, 0.382. That's a price region where I'm potentially willing to entertain more. Certainly 85. I wouldn't double my position at 85. I'd take out a 50%. I'd bump the position size 50% at something like that. That's still a price point above entry. Go figure. Relative premium, and that's important. Tapsy, hello. Much a pleasure. One curious view. Seems like a recession was never fully priced in, but looks like the bear is over. Bull bear, drive you nuts, as I've said earlier. Premium or discount is the optimal way to engage with markets. Do you think we will see a correction from this point? You got to be more specific. What is a correction, and what is the goal? What is the point of a correction? Does that mean you could potentially have a discount? And a discount on what asset? And what's your goals and targets with a specific asset? I mean, if Bitcoin rips more than a 10x, first off, that's diminishing. It's been diminishing returns for years at this point. And 10x is kind of very much consistent with what everyone's talking about. Maybe a little more irrational exuberance, but 10x. So what the heck is the point of doing anything with any other enterprise if the 10x is your goal? So you have to understand your expectations, your goals first before you could contemplate, is something going to dip and I can buy more? What do you want to buy more of? Why? What's the significance of it to a portfolio? Is it cash flow? And then it's XYZ. Cash flow assets, you have to consider X, how much does it cost? Y, how much is it paying? And Z, how likely is it to continue paying in the future? So what are the reasonable XYZ targets? 20, 30, 40% on a yearly basis, 2.5, 3, 4 year ROI. You need some serious position size. That's also geographically a consideration. If you can get 25% a year on 100 grand, 25 grand a year changes your life in a variety of countries around the world. So you got to understand what your expectations are, what your needs are. And I would very much encourage people to invalidate anything that is a to the moon type narrative. That's the fastest way to lose your capital. That's not rational. You don't want to make as much as possible. You want to make what you need, and that will serve you better. Leonardo Velodrome, let's take a look. 5.2 mil. Okay. Huh. Liquidity 5.2 mil, 65 mil, fully diluted. Fully diluted. Is there a cap? Is there a cap on their supply? There a cap? There's no cap on their supply. I guess there is an emissions curve. Uh, 778, bottom the middle of last year. What was it from all-time high? 80%, 778. Sitting on a 7x. Bottom here is 3 cents. What the hell is that middle of last year? Jesus. This chart is short. It's not going back to 22. I mean, what was that? Launch? All-time low was launch, I guess. So someone sitting on, 7x, someone with launch timing. Okay, it looks actually very good technically. Now, where I've hesitated before with regard to Velodrome is just the optimism network and the assets that were renting votes, and it was just cyclical renting of votes, and there was no asset that I found entertaining or interesting from an enterprise importance perspective. It brings me back to like the L2 conversation of Arbitrum, Optimism, Polygon. Like, what are you doing over there? Are you literally doing the same shit on Ethereum mainnet, just cheaper transaction fees? And I don't think that that's interesting to me. So I just so damn it, from a technical perspective, this looks quite interesting. But I'm not really interested in anything else about it. Um, Bet you the returns are quite interesting, and that'll throw me off. I don't have it in my history. Let's take a look. What's the damn website? Let's take a look real quick. I'll humor you guys. Velodrome. What's their damn website? Discord, Medium, Velodrome Finance. I spelled it wrong. Well, that's nice. Hey, you guys see what that did? Auto redirect to IPFS? That's pretty interesting. Only small cap assets have a capacity to make moves like that. I literally legal. I hate this shit. This is what like Abracadabra did. I'm certainly not going to sign this. Yeah, I'm not. No, thank you. Uh, Whatever. It's done. Not interested. Sorry, guys. Uh, yeah, I hope that helps, or it doesn't, or sorry if it's disappointing. If you have 100K on chain, you probably have at least 1 mil of net worth. Who has 100K on chain? Yeah, I guess you got a point there. Well, it depends. I mean, who's taking that kind of risk? Maybe someone made all their money in the crypto space, and they have, like 1.5 net worth, and they have a mil on chain. Who knows? Could be a variety of different configurations. One curious view. Wow, Cap not convinced on the L2 narrative. No, I'm just cheap transaction fees don't mean shit. I want I want the big bank money. I want a bank that's running billion-dollar transactions on mainnet, and they don't want to touch L2s because they want the instantaneous finality. That's where the money is. Now, the problem is, from a small portfolio perspective, you're not going to be able to engage with that. It's just too expensive on mainnet. So you have a very different landscape on L2s. That's, you know, unfortunately, it's not a conversation that I'm going to be useful at. Um, I don't need to, and I don't explore the smaller opportunities on the L2s. Sorry, it is what it is. Joe made that. I think the front end for Velodrome is compromised. Whatever, it's all good. I'm not signing nothing. Although its signature doesn't mean much, and it's on an L2 of which I have no capital. But is what it is. Mainnet is for millionaires. Listen, it's not necessarily for millionaires. It depends on a lot of considerations. 50 grand, 100 grand, and you're doing 2 transactions a year. That's not a millionaire. That's 100,000-aire. But you also have to have experience with investing and capital management. I've literally done like 2 transactions in all of 2023. Could have done it's with $200 worth of transactions, and then with Warden, you have to be smart about it. With Warden, what is it, the L2 claiming they have at this point? You could vote on L2s or something. So there's interesting stuff. And if you're talking about Convex, it's a signature claim. If you're talking about Prisma, it's a signature, vote rentals. The curve is expensive to vote. Sure, but you could have auto compounding staked DAO, auto compounding in a variety of different implementations. There's a variety of ways to engage with L1 with mainnet with not being a millionaire. But you have to also be extremely considerate and prudent and restrained and responsible with your capital. Well, that's pretty disappointing. One curious. But fortunately, I clearly didn't connect, and I don't have anything on L2 anyway. Whatever. Mainnet wanted $400 to stake by LP in the all compounding contract. That's not feasible long term. Well, if you all right, it's not feasible for $1,000 portfolio. It's not incredibly feasible for a $10,000 portfolio, but it's feasible for a $100,000 portfolio, and that's still not $1 million portfolio. Just a technicality. Hope that helps. L2 is the bet for when tourists come to play at the crypto casino. I don't like casinos. I don't like gambling. I don't want to gamble. I'm the person who talks about crypto in terms of credit and macro financials and liquidity and what these systems have a capacity to offer the global financial system from a practical use case. It's a big deal to be able to print liabilities permissionlessly. That's literally the foundation of the global financial system, yet there's no one saying you can't do it in crypto markets. You go to a fucking bank and you want to print some dollar liabilities, they're going to say, how much you paying down? What you down? Stuff like that. They're going to ask you your background and ask for a blood test. And they're going to do their due diligence. But in crypto markets, you post collateral, you borrow money. 5 seconds. That changes everything. No conversation, no underwriting, no nothing. So I don't need the crypto casino. Because if you roll real world utility into 2030, you don't have to do anything. There's no betting. Mainnet is for wallets plus 30K. Yeah, 10 is getting, what do we got, 55 Gwei right now? It's expensive to operate on mainnet. Yeah, definitely 5 digits plus. Any thoughts on Gala? Just released their new layer 1 blockchain and have nodes that have no networking with 25K nodes. Gala token to be used as gas. Currently running a node that's worth selling. What does the network do? I don't know what the network does. I mean, literally, I posted a tweet maybe last week that EVM networks are the new Ethereum ICOs. Or EVM networks are the new EVM ICOs. I mean, literally, there's a new network everywhere. It's like 2017 all over again. So just keep that in mind, in my opinion. I understand very well the way you are seeing the market. I just think that the moment of high volatility liquidity is also part of the macro game. Well, yeah, when there's high volatility and high liquidity, there's plenty of capital to make, but it reduces to the same equation that I talk about. Are you buying at a premium or a discount? Is you want to buy at a discount and sell at a rational exuberance of premium. So when I talk about a lot of things, it kind of reduces to the same shit that everyone says, like buy low, sell high. But there's more to it. It's when is it a premium? When is it a discount? And that's why we inspect things like the time-weighted average price, because then you can see when something is a premium or a discount. Right now, Ethereum is at a premium. You're paying more than the market, the average price the market says it's worth, about 1900 and change, give or take. And I like the 3-month. We'll circle back around to the 6-month heading into 2030, but the 3-month for now offers some nice numbers. But clearly, there's plenty more upside, but we're going to have a mean regression at some point, and I bet you we crash to 2,500, 2,700. Just extrapolate the line. You know, what, $3,000? I mean, literally, this could be, it could be wild. Like, you could see some massive numbers, 15,000, then a crash to $3,000. So that's the way this works. Maybe it runs up. Maybe it runs up to $4,000. But that's your trend line. That's the mean regression destination. So if you're buying above the average, expect a mean regression at some point. That's when we could assess whether it's worth selling and finding a top. Ethereum limit orders have not been filled, but the price is taking off. Should I keep waiting? I don't have an answer to trading questions. I don't have a capacity to offer solutions to those types of conversations that we should be having with oneself. Should I buy? Should I wait? Limit orders. Listen, if you want to own something, own it. You don't want to be afraid to own something. If you want to own it, own it. Do you want to buy it cheaper? Why? So a lot of what you're thinking about is emotional complexity. You're questioning whether you want to own something. Well, I appreciate it. I appreciate the complexity of the conversation we must have with ourselves. And it's hard. It's much easier when you're below the price. When you're buying at 1700 and you're staring at this chart, and that's a different conversation, and that's kind of like the conversation that I had here with myself. It's not at a premium relative to previous highs, and it's not too far off the lows, and it's not too far off the lows. It was 100% off the lows, significantly down from all-time highs, and still below the time-weighted average price. So you have to look for points of confluence, and these points of confluence help you with the emotional complexities of purchasing something. But don't hesitate because of emotions. And it's not about making as much money as possible. I legitimately want to own Ethereum and Bitcoin because of what it offers from self-sovereign currency, censorship resistance, and all that shit that everyone talks about. But that's not an investment thesis. Those are characteristics of a money. I hope that makes sense. It's not, decentralized. I don't give a fuck if it's decentralized. I care to a degree, but that's not my investment thesis. That's a characteristic. Hope that helps. Thoughts on Aave? Aave's cool. Let's take a look at the chart. I got to wrap this up in a couple minutes. I got stuff, but let's take a look. I should have an Aave chart in my. Let's look at Coinbase. I mean, they're all the same charts. Everything is the same damn chart. I mean, literally, if you take a look at this chart and then you take a look at DOT, I mean, come on, it looks identical. I mean, let's move it up and you'll see. I'll flip back and forth. I could probably put the two on top of one another. They'd be like, are they the same chart? Boop. Let's put this here. So DOT, I mean, literally is pushing just above the time-weighted average price. Now, I don't have my data. Literally, it's a market cap type thing. I don't know. I don't have any capacity to provide additional sentiment. It's not on my radar. Offers no revenue. It's just not. I mean, there is revenue from the security module, but it's just not of interest to me. Like I don't think it fits my qualifications for what I would entertain as a position. It's like the same thing as like a chain link to me. This is big tech. Aave is big tech. It's important. It's a money market. It's systemically meaningful. And Chainlink is very systemically meaningful. I think Chainlink is more useful for the outside world meat space than it is for the crypto markets. I think it's kind of limited with its capacity to provide what's needed for the crypto markets, but the capacity for it to interface with the real world is a big deal. And a capacity for it to offer its cross-chain real-world asset, and that infrastructure is a big deal. But like crypto oracles on-chain for smart like we've seen issues with its capacity to provide the best information possible for moderately cap, not small cap, even mid cap assets, and so I know it's absolutely systemic, but it just doesn't fit my criteria for something I'm interested in. Hope that helps. Thoughts on Aave as far as price? I'd have to see market cap and stuff like that, and I mean, look at the price. You're sitting on 100% off the bottom. Now, what's the potential? Is it going to produce a 10x? And let's take a look at where it is. You got me to look. So market cap 1.5 bill. So 10x 15 bill. It's disrupting the top 10. What's the odds of Aave disrupting the top 10? Probably at some point, but how many things can everything be in the top 10? There's a lot of things that say, hi, I'm going to be in the top 10. That's not something that I would bet on. I wouldn't bet on top 10 disruption. And if it's going to produce a 10x and completely disrupt the entire top 10, it's like, all right, just own Bitcoin. Bitcoin's going to hit a 10x. And it's a much lower risk profile as compared to Aave. So that's the simplest way I would look at this. You got to understand comps, and that's why it's like real estate and comps. And what are the comps? And if this is going to produce a 10x, and the comp is a Bitcoin 10x, why the hell are you going to own this? Food for thought. No, I don't short trade, my friend. I hear good things about Sol. Have you moved any liquidity over there? Nope. I don't play around on it. I hear good things too. I like Solana from a network perspective. I have no need for Sol exposure. I have all the exposure that I need vis-a-vis Hero Network, and even it's extremely volatile. But is that really unexpected? Is that really unexpected? So I have all the exposure I need to the network, and if it does what everyone thinks it's going to do, yay, because then I have all the exposure I need and it's going to do very well, and I have absolutely no need for Sol exposure. I mean, where's it going from here? Is Sol going to rip another 10x from here? If it rips another 10x from here, it's pulling 100x, and that's pretty crazy. So don't need that. If it's pulling a 10x, I'm not going to own it versus like an Ethereum or a Bitcoin. So it's just past the discount window. It needs discount. Buy at a discount, sell at a premium. That's like buy low, sell high. That helps. Take a look at upside price target in that case. I mean, the upside is the comp. What's the comp? If anything is going to produce a 10x, there's literally nothing to own, as you might as well just own Bitcoin. In a period of irrational exuberance, that's where I'm looking from a blow off top type perspective. 10, 12, something like that. I don't know. I don't see it hitting a 20. See Ethereum probably hitting a 20. Both a 10 and a 20 is crazy. We're talking about multiples here. These are crazy numbers. That's why crypto is interesting. But you got to also respect the fact that even saying double in price is crazy. Hope that helps. It is, as Cap said, the emotional part. Fear of missing out. It'll drive you nuts. All these emotions will drive you nuts. Makes sense. Thanks, Cap. You're welcome, KG. Okay, let's wrap it up for today. I appreciate everyone that stuck with me to the end. It's a good stream. A lot of emotions running hot, especially as the market gets hot. And I'm sure it's going to only get more hot as time passes, especially. Can you imagine having this conversation we're having right now at 56, 76, 96, or Ethereum at 5? We're going to be on these streams for 2 hours at a time. 36 people made it to the end of the stream. 17 likes. Smack that thumbs up button. Tell everyone to subscribe. I appreciate everyone who's stuck with me to the end. Link to the description for the most rational community in the entire crypto space. I appreciate everyone in there. I will see you guys again later this week. Peace.